JJ the CPA. Hope you're doing well. I'm going to have a series of questions throughout this video that I'm going to answer throughout the day, and then we'll compile it. These questions came from emails. All right, got a great email here from an attorney, initials APR. They received an EIDL advance of $2,000, then they got PPP funds, and then they've gotten approved for the EIDL loan. So, unfortunately, here's where we're at. It's June 2nd, but what the SBA has made clear is that any EIDL advance that you received will reduce down the loan forgiveness of the PPP. Seems unfair. So even if you're using them for separate purposes, which you are to do, meaning using the EIDL differently than how you use your PPP, even if you work it all perfectly, even if the amount of your PPP, you were able to show that you got full forgiveness, so to speak, meaning you spent it all and it qualified, the loan forgiveness amount that you come up with on that application, unfortunately, you would have to reduce, in this circumstance, the loan forgiveness by $2,000. Seems unfair. It doesn't affect the EIDL advance, meaning you're not paying that back. There's no look back on that. It just affects the PPP. Now, the second question was, if you're getting the EIDL loan, just the traditional loan, you still need to use it for purposes that are not PPP while you're spending the PPP. See the video that I've done that is about the uses of EIDL, which is for ongoing operating expenses. But the EIDL loan does not affect the PPP forgiveness. It's just the advance amount. So thanks for your question on that. Hopefully that helps. And you got our koozie. I'm so glad, and I love it that you were excited about it. Thank you so much, and really appreciate all your support and watching. All right, hey, got a question here from Pedro. Thank you so much for the email and for watching. Question is, they've got a corporation. They are the two owners, the husband and wife. They're both employees. They pay themselves wages. They qualified for PUA. And so the question is, they got the PUA, and then during the era of using the PPP funds, they're not taking PUA. So the question was, can you get PUA after the 8 weeks? And the answer is yes. However, I'm just going to put a caveat that it does depend state to state in the sense of the requirements. So you still have to meet the requirements that your state puts out there, which seems kind of unfair in the sense that PUA is a federal program. But I would see no reason that you wouldn't qualify to receive the PUA after your 8 weeks. So I think you'd be in the clear. Of course, you'll answer the questions as you go through to reinstate the PUA, but you definitely would qualify for it if you meet the qualifications in your state and at the time that you're requesting it. All right, hey, thanks for watching. I really appreciate it. All right, we got a question from Patty, and thank you so much for subscribing. Patty indicated that she's not subscribed to a YouTube channel until mine, so really appreciate that, and thanks for taking the effort to do it. I know it does require a sign-in and an account and all that good stuff, so thank you so much for that. I did reply to the email, but I thought it was a great question, so even though I gave the answer in the email, I wanted to share it with everybody, which was, we have a set of circumstances where you have parents that own an S corporation, and then you have the son or daughter of the parents that works in the S corporation and receives a W-2. So we do know on the PPP loan forgiveness application, the owner employee's wages are based on 2019, and the health insurance and the retirement benefits based on 2019 only, divided by 52 times 8 is the amount that's included in the forgiveness of the PPP. So the question was, and it's a great question, but the question was, does the son or daughter who does not own the S Corp, but the parents own 100% of it, does it somehow make the son or daughter's compensation considered owner employee? And as of right now, June 2nd, and I don't think this will change, but as of right now, no, that wouldn't make any difference. It wouldn't be considered owner employee. I don't think that would change at all. There's some other areas in the tax law where that could make a difference. So that's why I think it's a great question. But for PPP, I don't see that the son or daughter receiving wages of a business owned 100% by the parents would cause the son or daughter's wages to be considered owner-employee wages. All right, hey, great question. And again, thank you for watching. Really appreciate it. Thanks for all the support. All right, got a great question from Loretta. And the question is related to an S-Corp and reasonable compensation. They applied for the EIDL and got it, $1,000 based on one employee. And so they don't have to pay that back. There's no look back on that. This particular client has not applied for or received PPP. So as it relates to the EIDL, there'll be no effect then. You don't have to do any kind of look back. There is a question here about reasonable compensation. It would be too late to report anything related to wages for 2019. Probably an obvious, but then the question was, should they show reasonable wages for Q1? Well, it's too late for that as well. Reasonable wages, though, another question was, what percentage of profits would be considered reasonable wages? And there's not anything really on point with the IRS. What they talk about is reasonable compensation. Kind of a rule of thumb is, you know, if you have a business that's netting maybe 100,000, that maybe they're pulling out 60, percent, 70% as wages, the rest can be taken as distributions. What kind of comes down to play there is that if it's a one owner S-Corp and they're the only one providing the effort, distributions are typically in essence based on net profits. And that would assume, if we're just going in a traditional sense, that net profits would also come from the efforts of others. But I really feel like a 70-30 split is very, very reasonable. And then without having to go through the detail, the question you had on the balance sheet is correct in terms of what to reflect. But the reasonable compensation wages would just need to start now. And then if they did apply for PPP, I don't know that they would qualify for anything with the S-Corp because they didn't have any wages paid in 2019. And there's no way to go back and update or do anything related to that. And then same thing for first quarter. We're just past that point. So, all right, hey, thanks for the question and really appreciate all the support. All right, thank you so much. All right, we got another question from Loretta, which is a great one. So we've got an S-Corp that's owned by two brothers. One's 50%, one's 49%. Because of the current circumstances, they reduced their wages down. They did sell some things and had some income that came in. They shared some of the profits based on that. And then they've not applied or received PPP. They did receive an EIDL. The question's related to them being able to get PUA. So it does depend state to state. My recommendation is that they go ahead and file, answer all the questions. Of course they would, but answer the questions that are being asked. Every state, for whatever reason, has a different set of questions. So it makes sense to me that they would qualify based on the fact that they don't have any other income coming in. They sold an asset, in essence, that allowed there to be some income that was taken out. PUA has no effect on the EIDL and vice versa. So to me, it seems like the fact that they're not making money, they're not pulling wages out, they're unable to pull wages out because there's not money to pay themselves, regardless of the fact that they sold an asset. And on the PUA, it seems like they would absolutely qualify. So hopefully that answers the question on that. And the big thing is just have them go and apply. All right, thank you. All right, got another great question from Loretta, and basically got an S-Corp. They've got SBA approval, it sounds like, for the PPP. There has been some unemployment benefits, PUA, either received or going to be received. And so the question is how to book these things in the S-Corp. So a couple of things. The PUA is being paid to the individual, so the PUA or any unemployment would not be booked into the S-Corp. That would just be paid to the individual and they would keep it. It is taxable to them. If they're receiving the PPP, then you indicated that you watched my video, which you all should watch. I have a QuickBooks video talking about this, but for now, in essence, when the money comes from the PPP, you book it as a liability. And the reason for that is that you do have to spend it as it is indicated. If you don't spend any of it properly, then you're going to owe it back, and it's just a straight up liability. And then as of June 2nd, where we're at, whatever you spend the PPP funds on, it is not going to yield a deduction for those expenses because it's a grant. It's been that way forever. But then as you either get to year end or as you're spending those dollars, that will reduce down the liability, meaning whatever got in PPP funds, whatever's not forgiven. So if you got a $35,000 PPP loan, you spent $30,000 of it, you got $30,000 of it forgiven, then $30,000 is going to be a reduction of your expenses. And then as it relates to the ERC, if somebody gets PPP, they don't qualify for the ERC. So if they already got ERC, the Employee Retention Credit, the IRS has not indicated then how that gets returned or how it's recaptured, but in terms of how to book that, that is in essence a tax credit. It's not income per se, but it is a reduction of expenses. It's a reduction of payroll expense. So the way that I would book that would be in essence as an expense. It would show up as a negative expense, and you can either put that as its own line item in the payroll section or down in other expenses. So it's technically not taxable, the Employee Retention Credit, but it is a reduction in the expense that you're able to deduct. So anyways, how to report those various items. And the last thing I'll just throw out there on the SBA, if someone's getting an EIDL advance, in essence, you would report it like the PPP. It can either be as a liability, and then as you spend it, it reduces down the liability, or in essence, it's going to reduce down the expenses that you're using the EIDL for. So it sounds weird to call it a negative expense, but that's just simply what it is, because it's not income, but it's a reduction of your expenses. So if you have on the EIDL, you get a $1,000 advance amount, and you spend that $1,000 on ongoing operating expenses, well, you're going to spend those dollars. It's going to be an expense on your P&L, but then to make it right by year end at least, or on your tax return, you're going to reduce down those expenses by the amount of the EIDL advance. Now, if you're getting a traditional EIDL loan above that, you're going to treat it like any other loan. You're going to record the liability, and then as you pay it back, then you are reducing down the liability. It doesn't affect the deduction of your expenses on the EIDL loan, okay? So we have the difference between the advance and the loan, and then any interest that you pay on the SBA EIDL loan. Of course, that would be deductible. All right, hey, great question. All right, fourth question here, and the last one from Loretta. Good questions. Got an S Corp, and they're trying to figure out if they should apply for PPP. It indicates that there's never been a reasonable salary. So if there's not been a salary, they won't qualify for PPP in any way, shape, or form. So even if they have rent, that's not a qualifier because the PPP loan is based on wages only. So they're not going to be able to qualify for anything. The distributions that they take won't qualify them for anything on the S Corp. So the S Corp owner that doesn't pay themselves wages won't be able to get a PPP loan if the only employee, quote unquote, is the owner. Or stated another way, if you have an S Corp with no employees and the owner didn't pay themselves a wage as well, then that S Corp's not going to have a way to qualify for the PPP. It could qualify for the EIDL. $1,000 would be the amount, but as it stands right now, June 2nd, the only ones that are able to get the EIDL advance, let me be clear, are those in the agricultural business. And be able to apply for the EIDL loan above that would only be for the agricultural businesses. So really great questions, all on the S Corp. Thanks for everything. All right, hey, got another great email from Patty. Gosh, looks like last week. We're just trying to play a lot of catch up here, but thank you so much for watching at 2 a.m. And a couple of things noted, put together and provided and shared the most fabulous worksheet that I've seen yet on the PPP forgiveness calculation, which is cumbersome. So sent me a Excel spreadsheet, and I mean, it covers all the periods and the FTEs and all the different payroll periods, because when you're going to the loan forgiveness, you have to know your payroll from February 15th, 2019 to June 30, 2019. You have to know it from January 1st, 2020 to February 29th, 2020. You have to know it February 15th, 2020 through April 26th, 2020. You have to know it on February 15th separately. And you need to know about your payroll during your covered period or alternative covered period. And then you need to know your payroll based on June 2nd here, but you need to know where your payroll is June 30. So she has that all broken out and then related to the wages and the utilities and things to that effect. She's got a great comment here indicating that on the non-payroll costs that Patty's thinking, which I agree, they have all the non-payroll costs grouped together and clarified as either paid or incurred during the covered period and paid on or before the next regular billing date, even if the billing date is after the covered period. So the FAQ addresses utilities, probably because that is the one area where the charges can really lag. And so anyways, make sure you're watching my videos on that, where I talk about how it really is going to turn out that it's going to be more than 2 months of utilities and more than 2 months potentially of rent and more than 2 months or more than 8 weeks of payroll. So check out the videos on that. So, and then, yeah, just commenting here, Patty is a spouse who's been working her tail off, and unfortunately, most of the time, right? This is just normal life. If you're not a business owner, you may not really think this through, but a lot of times spouses, they're working in the business, they're not pulling a salary, partly because it creates a payroll tax. I mean, there's a lot of reasons to not pull a salary for one of the spouses. I'm just saying it's common. I'm not saying that that's how you should do it, but I'm just saying that is extremely common, okay? But anyways, now you have a spouse that's working more than ever, but if they are not an owner, so Patty, let me put this down, because I don't know if you are or not, but if you're not an owner, as it stands right now, June 2nd, okay, if you're not an owner, even if your spouse owns the business, if you are paying yourself wages, then it would count. Now, sounds like you are probably an owner, so yes, if you're an owner and you haven't been paying wages to yourself, then of course you wouldn't be able to include it in the forgiveness, even though it's okay to pay yourself wages, just wouldn't be included in the forgiveness. I think that you had indicated just that. But again, if you don't own it, now this may change, because quite frankly, I think that it really could. But I'm telling you right now, in the guidelines and everything that they put out so far, you would think they would have already thought about it and addressed it. Long story short, if you don't own the business and you're working, which you are, I think that you could pay yourself a wage, and unless they change it, it would be included in the forgiveness, because in essence, you are working out in the business and you are not an owner. However, do that cautiously, and only meaning is that pay yourself what you would want to pay yourself, and then just be prepared. Maybe there'll be an exception to it later, but I'm telling you right now, there's not. So you do deserve to be paid, as you know, and in my opinion, you do deserve to get the forgiveness, especially if you're working your tail off, and especially if you're working more than you had in the past. So a couple of things to think on that. And thank you so much for the Excel spreadsheet. Great work on that. Truly impressed. Thank you so much, and thank you for all the support. All right, thanks, Patty. Hey, got a great email from Carl. Thank you so much for the email. Thanks for buying my book and delving into it. I really appreciate that. I wanted to include this in the video because I've had others that have asked about this, and I'm honored, but they wanted to know if it was possible to set up a brief consult via telephone or Zoom, and obviously to pay for my time. So I really appreciate that. And the reason I'm just putting this in the video is that Amanda and I are setting up right now a way to do that. So I'm going to do a couple of different ways, and one will just be that I'll provide a website that people, you could go to and you can find a time for us to visit, and I'd list the rate and you can pay, and then we would visit as often as you'd like, and it would just be a, as needed basis, because I think you all know I'm not able to take on clients outside of Oklahoma to prepare their tax returns. The other part is that I am putting together a group of business owners that, if for those that would want this service, where it would be a weekly group call by Zoom, and then include a couple of one-on-one calls throughout the month, and just doing a flat monthly fee for that. So stay tuned for that. Carl, I'll reply to your email on that, but I thought I would include it because I've had other people ask, and Carl will send you a link to that once we have that set up. So thank you so much. I really appreciate it. All right, got an email from Joshua, and Amanda, it came at 11:11. It's a special number for us and for many. Anyway, so basically, yeah, Joshua's in LA, crazy time. Absolutely hope everybody's doing okay. They got an email from the SBA. They're eligible for a dollar amount that is that's clearly the EIDL. And so they're wanting to know, is it you have to accept the whole thing? Is it all or nothing? They only wanted the grant minus the $1,000 that they received. So my understanding on this is that that loan is going to be through a lender that you're working with, or they'll send you to a lender in essence. And as I know it right now, you don't have to accept the whole thing. I know you said that you were looking for the grant minus the $1,000 that you received. However, the $34,000 that you received, and you'll just need to really ask the banker or the bank that you're working with to clarify this for you, since I don't have, of course, your exact information here. But my understanding is when you're getting that notice of your EIDL, okay, none of that is including the grant. None of it is including the advance. So it won't be possible, as I know it, that you're gonna be able to say, hey, well, of this dollar amount that I qualified for, I only want 10 of it for my grant. It's two separate programs. So if you got 1,000 related to the advance, that'll be all that you get. The amount of loan that you got, you can accept what it is that you want. You'll need to work with obviously the bank or the SBA on that, but I don't see that you will be able to convert any of it to the grant. So double check with that. Hopefully I understood your question. Anyway, so hey, I know you watch often and really appreciate all the support, and be safe. All right, got an email from Steve, thank you. And as it relates to this, the question is that they had a lot more employees in the prior year, and so of course their PPP amount is more than they have payroll now. And part of the reason they don't have as much payroll is because of everything that's going on, and they don't have the same number of employees. So it doesn't sound like it's a circumstance where they let the employees go because of this or put them on PUA. There's just a lot of businesses that have a payroll difference. I know that I had more payroll in 19 than I do now, but all of those changes related to my payroll were last August. So it had nothing to do with PPP. I've had the same employees since last August, the same number that is. All that to say, the concern here is they're not going to be able to reach the 75% mark on the payroll. But the thing to know, Steve, is that this is not an all or nothing. It sounds like it is, but it's not. Basically, whatever you spend on payroll has the potential of qualifying. Of course, there's other things that you have to calculate, as you would probably guess. But if you don't spend at least 75% on your payroll, then you just have extra money to give back, whether it's immediately or over the loan period. So again, not all or nothing, and so there's no reason to try and be concerned or find ways to spend that money to achieve the 75%. In fact, I really feel like if you did find ways to spend money to reach the 75%, you'd get burned pretty good, because when you go through all the calculations and the FTE and the salary comparisons and FTE comparisons to all the different periods, it's more likely than not that what would come up would be, even if you weren't trying to do anything incorrect, but what would come up is what you were doing to try and reach the 75% forgiveness wouldn't end up being forgiven. So just spend what you need and know that it's not all or nothing. So, all right, hey, thanks for the email. All right, got an email from Rebecca, and where you're at, I hope you're safe and doing okay with everything that's going on. So got a question here on the EIDL. So on the EIDL, the question is, do you get the advance regardless of the results of the loan, right? So if you've applied for the EIDL loan, how does that affect the EIDL grant, the EIDL advance, which is the same thing? And they're really two separate programs. So if you get the EIDL advance, the EIDL grant, right? That's the same thing. It's up to the 10,000. If you get that, you got it. It doesn't matter if you got the EIDL loan. It doesn't matter if you took the loan or not. So you could be in a circumstance you can go, you know what, I qualified for the EIDL, but I don't want it. If you got the grant, you can keep it, the grant being the advance. If for whatever reason you don't qualify for the EIDL, they come back and it's like, you don't qualify, you're not going to be able to get the EIDL. Lots of reasons that can happen. If you got the grant, you got the advance, you don't have to pay it back. So it's really two separate programs. Whether you get the EIDL or not has no effect on whether or not you're going to get that EIDL advance / grant. So two separate things here. So if you haven't gotten the EIDL advance / grant, then I don't know that there's anything we can do about it. It's a first come, first serve. I know that a lot of people had applied for it. They didn't get the money because it ran out. I know they replenished it, and so they went back to the applications that had been previously submitted, but again, it's still on a first come, first serve basis. Currently, June 2nd, the EIDL program is only available for new applications related to those that are in the agricultural business. And then SBA said, don't reapply. If we have your application, if you did apply, given that you received some results related to your EIDL, like the loan amount, it's clear they got your application. So if you got the grant, you got it, but regardless of the results of the EIDL loan, that doesn't affect the grant. So it does seem unusual that if you got word about your EIDL loan that you didn't get the grant. It does seem odd to me. I think it would be okay to call the SBA just to inquire, but it could be that you fell in some weird timing where the application went in and it hit for the loan part, but the advance or the grant, right, had run out. Seems like though, if you were in the system for that you might have been received the advance by now. So I think really your question was, is the grant, the advance, how is that tied into the loan? And it's just not. It's a completely separate everything, the way that it is. So follow up with them about the grant part and see what you come up with, and be safe. All right, got a email here from Fan. They qualified for the EIDL advance and the EIDL loan, which is great. But they got one deposit, as I'm understanding it from here. And so they wanted to know, can they just assume that the first $10,000 is the EIDL advance? And the answer is no, because they stopped doing that $10,000 after April 3rd, so it depends on when you applied. I know you're saying you were approved for the advance and the loan, so go back to that paperwork, of course, and whatever amount they indicated the advance was, then of course that'll be the amount. It may not be up to the 10,000 because they changed how they were calculating that. So definitely 100% follow back up with the SBA or the bank that was involved with this, because on the EIDL loans, the banks are getting involved with the loan amount. The advance comes directly from the SBA, but these loans are involving the banks. So depending on what the dollar amount is, if it's higher than 10,000, don't assume that the first 10,000 is the advance amount. So hopefully that helps, and thanks for the email. I really appreciate it. All right, got an email from DLA. Thank you so much. Appreciate you watching. So the email is that you have an owner who's the only employee for the S Corp, and the owner is then not included in the FTE per se, which is true. Would the owner's $15,385 still be forgiven? So on the loan application, yes, the owner's none of that reduction issue comes into play, not the FTE. None of that. You basically take, this is how the SBA fell down on it. Basically, you take whatever the compensation was in 2019, plus the health insurance, plus the retirement benefits. So whatever it was for that owner in 2019, you divide it by 52, and you multiply it by 8, and that's the amount that's forgiven, with the max that you had indicated there, the $15,385. Would be the max amount, but that would be the max that would be for the wages amount. So based on this, if someone was able to include $100,000 in wages, the wages would be limited. But then when you're looking to that dollar amount, but when you're looking at the health insurance and the retirement benefit, that's in addition to that cap. If that doesn't make sense, because maybe I didn't say that all correctly, know this. I know you just gave me a dollar amount, but unfortunately that doesn't mean anything. You're gonna have to take the W-2 wages divided by 52 times 8, that's the forgivable amount for the owner, and then in addition to that, the health insurance and the retirement benefits would be deductible. The $15,385, yes, is the maximum that would count for the compensation based on that $100,000. So anyways, thanks for the email. All right, got an email here from Marcus, and this is a common occurrence. You have Marcus owns his own S Corp. He's the only employee, and he's paying himself wages, and got the PPP. So once the PPP is used up, you don't have to wait for the forgiveness to occur. But once you're past the 8 weeks, because you're receiving a W-2, the PPP, as you indicated, is going to cover you for that 8 weeks. And then, based on general knowledge, you would be able to qualify for the PUA. So Marcus, what you really want to do is when you get to that time period, go apply for it, okay? You don't need to keep searching for an answer, because the answer will be given to you by the state, period. So when you get through the 8 weeks of PPP, get on there and apply for it. I believe that you would qualify for the PUA for the time period before PPP and after PPP. But although I'm JJ the CPA, the states all have different interpretations. So here's what you need to know. There's no reason to be worried about it. There's no reason to be concerned and being worried if you're going to do something wrong, because the state won't let you. So when you have gotten past your 8-week period, get on there and apply. Again, don't keep looking for the answer. The answer will be by the state. You're not going to do anything wrong applying for PUA, because if you don't qualify, they're going to let you know that. If you're answering the questions correctly, which you will, if you answer them and it results in you not qualifying, they're going to let you know. But the PUA is meant for those in your circumstances to qualify for it after the PPP. You're not going to find anything on point. You're not going to find the SBA saying anything. You're not going to find the IRS or the government giving you the answer that you're wanting, because they've left it up to the states, which is very frustrating. So I'm just saying it again to really encourage you. Go apply, period. Stop looking for an answer. Even the answer I gave you, maybe it gives you enough incentive or courage or feeling relieved to just go apply for it. But even if you're not satisfied with my answer, go apply when it's time, when you get through the 8 weeks. Go apply. The state will not let you qualify for something if you don't qualify for it. So I wish all the states did it the same, and I hear your frustration and I feel your pain on it. So good luck, go apply. All right, hey, thanks Marcus, and thanks for watching. All right, got an email from Terry D. Thank you so much. Thanks for always watching and all the support. So they have a question here. You've got a circumstance where you have an S Corp owner, they own 100% of it, and they took payroll on W-2 fourth quarter of 2019, and really common occurrence. is that the owners that didn't take enough payroll pay themselves a 1099. And used to be, a common practice with the new tax law that went into play 1/1/18. It's not that the IRS disallows it, but the IRS won't count it as compensation in the sense of reasonable compensation. So it's not really your question here, I'm just mentioning it. But the question is, how will the 1099 amount paid impact PPP? So good question. I've not come across this one yet, even though that's a common occurrence. So the 1099 income is picked up on Schedule C. But I think where the problem can come into play, and we're not gonna find anything on point. So this one is pure opinion from JJ the CPA, and it's not really the greatest opinion in terms of it doesn't really result in maybe what the answer would hope to be. But the issue there is that you have an S Corp owner that's paid themselves 1099s. That's fine. It's gonna go on Schedule C. That's proper. It's gonna be subject to self-employment tax. Yes, that is how that's gonna work, of course, as you know. But that S Corp owner is not an independent contractor, can't be. They're not a sole proprietor because the business is the S Corp. They're not self-employed because they own an S Corp. So I think in the true spirit of how this all works, the Schedule C would not count for PPP. Now, they might be able to put an application in, get the money, go through, get the forgiveness based on all the Schedule C items. And I'm not saying they'd be doing anything wrong per se. All I'm saying is if I had a client, I would be telling them that either I don't have an opinion, or more likely I'd be telling them that I don't think you qualify for the PPP. Now, as it relates to what they would be able to qualify for PPP, unfortunately, it would be only what they paid themselves in wages. And then as it stands right now, here's the part that really doesn't bode well. But the way that it stands right now with the SBA, I think but the owner-employee forgiveness amount is what they paid themselves in 2019 divided by 52 times 8. Well, I know in this set of circumstances, that's not a great answer because they only paid themselves during fourth quarter, but there is no provision for owner-employees to take into account that they didn't pay themselves all year. So the 1099 is going to have no help on the PPP, and it won't have any help on the forgiveness. So, hey, great question. I haven't come across that one yet. So, hey, thanks for everything.